Have you ever wondered what would happen if the dollar stopped being the dominant currency? What would happen to your savings, your investments, or the price of the things you buy every day? Imagine for a moment that the world's largest economies no longer relied on the dollar for trade, financial chaos, or a historic opportunity. Today, emerging powers are taking a step that could change everything. The question is, are you ready? Because while some only see uncertainty, others are positioning themselves to take advantage. And we're not talking about a distant future. This is already happening. Countries that once relied on the dollar are now seeking alternatives. Why? What do they know that you don't? Stay with me, because what I'm about to tell you could change how you invest your money from now on, and it might just be your best opportunity to protect your capital. Did you know that for over 70 years, the US dollar has been the backbone of the global economy? Everything, from international trade to central bank reserves, has revolved around the greenback. But what if I told you that rain is starting to shake? Yes, we are living through a historic moment, one in which the world's major powers are beginning to question that supremacy, seeking new ways to trade and devaluing the role of the dollar. Countries like China, Russia, and even blocs like BRICS, Brazil, Russia, India, China, and South Africa, are already taking drastic measures to reduce their reliance on the dollar. This isn't just an economic issue. It's a geopolitical movement gaining more strength by the day. Why? Because they no longer want to depend on a financial system controlled by the United States, a system that increasingly seems to benefit only Americans. Let's look at a couple of recent examples. Russia, sanctioned by the West due to the conflict in Ukraine, has sped up its efforts to trade in other currencies, especially Chinese yuan. China, on the other hand, has been forming bilateral agreements with other countries to establish new trade routes without the need for the dollar. These are not mere theories. It's happening right now. The agreement between China and Russia is a clear example of how two giants are paving the way toward a new economic reality. Now, imagine the impact if more countries join this trend. What happens if BRICS and other emerging blocs decide that the dollar is no longer their reference currency? This could change the global financial landscape as we know it. And let's not forget that oil trade, a vital resource for the global economy, has always been in dollars. What would happen if the leading oil exporters decide to accept other currencies? This type of movement could trigger a chain of events that would shake the markets, from oil prices to the value of your investments. But be careful. I'm not saying the dollar will disappear tomorrow. However, what's clear is that the foundations it rests on are beginning to show cracks. And when those foundations shake, those who are prepared can seize huge opportunities. Because where some see chaos, others are ready to capture new ways of generating wealth. So, what does all this mean for you as an investor? It means you can't ignore what's happening. While some see this change as a threat, the smartest ones are already thinking about how to protect themselves, or even how to benefit. And this is where you can take action. But why is all this happening? What has led entire countries to seek alternatives to the dollar after decades of depending on it? Well, it's not just a whim. There are powerful reasons behind this movement that you cannot ignore. First, there's the geopolitical factor. The tension between the United States and other powers like China and Russia is reaching levels not seen since the Cold War. Economic sanctions imposed by the US, especially on countries like Russia, have forced these governments to look for other ways to trade without being tied to the US financial system. The result? The creation of trade alliances that exclude the dollar completely. It's a global financial rebellion. And it's not just a political matter. The economic factor also plays a key role. Inflation in the United States has raised alarms. In recent years, the US government has printed massive amounts of money, weakening the dollar's purchasing power. And of course, the rest of the world is taking note. Who wants to rely on a currency whose value fluctuates at the pace of one country's internal politics? Countries like China and India are looking for ways to strengthen their own currencies. Why? Because it allows them more control over their economies and, more importantly, it allows them to avoid depending on decisions made thousands of miles away in Washington. Moreover, many emerging countries see this trend as a golden opportunity to free themselves from the influence of large economic powers, taking control of their financial future. The world is moving, slowly but steadily, toward a multipolar system where the dollar will no longer be the center of everything. Bilateral agreements in local currencies, the use of cryptocurrencies for international trade, and the creation of new trade routes are accelerating this process. And the big question is, how does this affect you? Well, more than you think. And here's where the big question comes in. Are we witnessing the collapse of the dollar? Well, it wouldn't be the first time a dominant currency falls from its pedestal. If we look at history, the world has already seen how great currencies like the British pound lost their global power. Why couldn't the same thing happen to the dollar? Some economists are issuing serious warnings. Although it's not an imminent scenario, many believe that if more countries continue to move away from the dollar, the impact could be devastating for the U.S. financial system. This would affect everything from the price of imported goods to the United States' ability to finance its debt. A weaker dollar would mean an increase in inflation, directly affecting people's savings and purchasing power. But it wouldn't just be a problem for Americans. The collapse of the dollar would have global repercussions. Millions of investors worldwide have assets denominated in dollars. If the dollar's value plummets, their investments could lose value overnight. Commodity prices, like oil and gold, could skyrocket, and market volatility would intensify. A catastrophic scenario? Maybe. But here's where things get interesting. While some see this potential decline as a threat, others see it as a unique opportunity. Because in times of crisis is when real fortunes are made. And you, as an investor, have the chance to position yourself intelligently. Is the collapse of the dollar a certainty? No. Is it possible? Absolutely. But the important thing here is to be prepared, have a plan, and above all, not wait until it's too late to act. Are you going to be one of those who watches the world change? Or will you be one of those who takes advantage of this transformation to protect and grow your wealth? Now, here's the exciting part. Where some see chaos, you can see opportunities. In this de-dollarization scenario, the smartest investors are already looking for ways to benefit. Because while the dollar may be in decline, this doesn't mean there aren't ways to protect yourself, or even multiply your capital. First, let's talk about diversifying into other currencies. As some countries move away from the dollar, there are currencies gaining strength. The Chinese yuan, the euro, and even the Japanese yen are options some investors are considering to diversify their portfolios. But don't get it wrong, this isn't just about swapping your dollars for euros. It's about diversifying intelligently into assets denominated in more stable currencies, or at least less exposed to the internal issues of the United States. Then, there are safe haven assets. Gold, for example, is the classic refuge in times of economic uncertainty. No matter what happens to the dollar, gold always holds its value in the long term. And what about cryptocurrencies? Though volatile, stable cryptocurrencies, like those pegged to secure assets, are gaining popularity as a way to protect against the dollar's devaluation. Some even see Bitcoin as a refuge similar to gold, but with much greater long-term growth potential. But diversification doesn't stop at currencies and safe haven assets. There are also emerging investments that could benefit from this change. Countries like India, Brazil, or even Vietnam are strategically positioned to take advantage of the new global financial order. These emerging markets are not only distancing themselves from the dollar, but are also growing rapidly. Investors who know how to identify opportunities in these countries could see massive growth in their investments in the coming years. And let's not forget about energy. As oil and natural gas trade shifts to other currencies, energy companies that can adapt to this new scenario could see explosive growth. We're talking about a total reshuffling of the game's rules, and companies that play their cards right could generate incredible returns for investors. Now, you might be asking yourself, what do I do with my current investments? The good news is, you don't have to panic. In fact, the best investors know that the key is not to run from risk, but to diversify and be prepared for any scenario. So, let's look at how you can position yourself to protect and grow your capital amidst this change. First, review your current portfolio. If you have a significant exposure to the dollar, now is the time to consider alternatives. This doesn't mean you have to sell everything, but you might want to consider moving some of your capital into safer or more diversified assets. And we're not just talking about currencies, but also sectors that could thrive in this new context. Tech companies leading innovation in emerging countries, for example, have great growth potential. Another option is to look towards commodities. If the dollar weakens, it's likely that oil, gas, and precious metal prices will rise. This means that investing in natural resource companies or funds tracking these sectors could be a good way to protect against inflation and the dollar's devaluation. And of course, if you want to be even more strategic, consider increasing your exposure to countries that benefit from de-dollarization. India and Brazil are two key examples of economies that could thrive as the dollar loses influence. Their markets are growing rapidly and are becoming increasingly attractive to global investors. At the end of the day, the key is not to sit idly by. You can't wait for the dollar to fall to react. You need to stay ahead of market movements. Because, as always, those who act first are the ones who get the biggest rewards. And the best part is, if you position yourself well, you won't just protect your money. You could be among the few who benefit enormously from this major shift. And there you have it, the change is already underway, and it may be one of the most important financial movements of our era. Don't sit back and wait. This is the time to act, protect your money, and position yourself for the opportunities that are coming. If you want to keep learning how to navigate this new financial landscape and secure your future, subscribe to the channel and hit the notifications bell. See you in the next video.